Welcome to Friday, traders. Here we are at last, the end of the week, and a bit of a strange end to the week so far. We'll get stuck into it. Morning, 2K and Stel.
Hey,
Good morning.
I saw you slipping in with seconds to spare.
How is everybody?
All right, mate. How are you feeling?
Yeah, better. It's been a quick recovery from yesterday, so that fingers crossed. It's looking a lot better.
Kids all right?
Kids fine. Yeah. It's some kind of virus that my eldest had, and then passed it on to me, and then I kind of collapsed for a day. But I'm better, a lot better now.
Yeah, it's good to share, isn't it?
Yeah.
Kay, you all right, mate?
Yeah. Spent a few short nights this week on central banks and last night UEDA. But yeah, my old bones are saying this is enough for this week. I'm already feeling tired.
What time's the pub open? Right, just before we kick off, we will be holding a minute's silence at 11 a.m. The UK and I think a few countries around Europe are doing the same, just for the Ukraine situation, the anniversary of the war. So we will go quiet for a minute on the strike of 11 a.m. So if you don't hear anything, that's the reason for it. Until then, let's get stuck into stuff. Right, we'll kick off in Japan, get through all that stuff. Start off with the old guard, Kuroda, who said Japan inflation is going to fall below 2% in mid-fiscal year 2023. That's around about October-ish, November-ish there, mid-fiscal year. And that the bank will continue monetary easing. Japan is no longer in a deflationary environment, but wage inflation is low. Reuters ran a poll, and nearly half of Japanese firms want the BOJ to revise its negative rate policy. Nearly half. That means that over half still think they should keep going. So that was 47% say the new Bank of Japan chief should change policy on negative rates. And more than a quarter of companies want revisions to the price target. This is something that will be maybe considered or part of considerations when the new man steps in. The remit between the government and the bank may get a big discussion whether they need to change anything. But for now, they're all adamant it stays the same. Before we got the new boy jumping into the hot seat, we had some CPI data, and it came out all as expected. National CPI, core CPI, coming in at the 4.2%, CPI headline 4.3%. The market did absolutely nothing over that because I stayed up for it. However, we shouldn't underestimate the point that this is the highest levels of inflation in Japan for decades. So, don't forget that part of the equation. Even though, the market tends to move if there's misses or beats of expectations, it has confirmed that inflation is still rising at a hefty clip in Japan. And that's what we need to focus on. So from that, we swung into Ueda and his first appearance in Parliament, or public appearance, if you like, speaking publicly. And it was very disappointing, if I have to say. I'll go through the headlines and we'll talk about the reaction. I haven't picked out every headline because he was speaking for about 2 hours or some sort. So I picked up probably some of the choice headlines. First off the bat, that the BOJ's current monetary easing is appropriate. He says the inflation rate is peaking out and it will slow substantially from the next CPI data. So maybe he's seen something in the tea leaves that we haven't. They must mull yield curve control normalization if the price outlook improves, but want to refrain from talking about the specifics of YCC now. Then he went on to say shortening yield target is one among many options in the future. A sudden tightening now would impact businesses negatively. Too early to discuss specifics of an exit strategy, but that if the BOJ were to normalise policy, it will likely do so by raising interest paid to reserves parked with the central bank. The BOJ won't conduct bond selling operations. It also said it is standard monetary policy to respond preemptively to demand-driven inflation, but not immediately respond to supply-driven inflation. This is something that Kuroda has been going on about, that the inflation is supply-driven, not demand-driven. Monetary policy decision could be a surprise, but wants to limit the element of surprise as much as possible. Wouldn't pass any comment on FX rates, and says that the BOJ should refrain from talking about specific yen levels. Just quickly, one of the deputies was in the seat as well. Uchida said, "I hope to come up with various monetary policy ideas as deputy governor." Isn't that nice of him? So just to give my 10 cents over the Ueda comments, in one aspect, as expected, not looking to rock the boat at all. He's kept the lines in that current policy is appropriate. Some small hints of if buts maybes about normalizing policy, but without going into any specific detail. Noting that any changes will have to be communicated very, very well to stop any market shenanigans and markets getting too expectant or reacting too adversely. Also, the point on what they might do regarding normalizing policy. So raising rates on interest reserves or reserves parked with the bank rather than wholesale interest rate rises. So there's a little bit in there for everybody. Hints, very, very mild hints about changing a policy, but no rush to do so right now. Bit disappointing the dollar yen reaction over it. You know, we waffled around in about an 80 pip range or so. So nothing really major there. Kay, get your thoughts on it. Not going out the limit at all, really, is it?
I think he missed a chance there to not aimed at moving yen, but he missed a chance there to really throw the door wide open. Even if they won't change it very quickly, as already I've been commenting many times about it. I don't think Japan is ever going to go as fast as any other central bank, but he missed a chance there, in my opinion, because he was and I was watching it for a decent while, and I was watching the how do you call it, the demeanor or the stature also of the people asking him questions and himself replying, and it was very, very mellow. And where for the then coming over to the yen, for the hawks in yen, for the people bullish yen, where he really have to make them think about what's going to happen, is that repeated comments about the government and the Bank of Japan cooperation, communication, whatever. It's a clear hint, to me at least, that they are not going to throw the toys out of the pram at all, because they don't want to put the public finances in danger. So that is really my big take about it. Yes, they will, and as I said straight away on the comments afterwards in the room as well, I say yes, they are going to do some style or form of normalization, but it's not going to be anywhere close to certainly not the Fed, but then even what the ECB is doing, or even if you look at the other currency where we used to trade risk in the good days, Swiss, they're even slower. They're going to be slower than the S&P, and that says a lot. So yeah, to me, it's not. It hasn't given food to the bullish yen crowd, and as we've seen, big bond selling to try and make this 50 bps break on the Japanese 10s. Yesterday, well, after the event, the curve came down a little bit, but we're still hanging around that level, because and I think the market is right to expect that we are going to see some form of normalization. They are probably going to do something about YCC, but it doesn't. He nor his deputies were hinting at abandoning it. They're going to look at several factors, so that puts us already 3-4 months out from now. Yeah, so the wages are going to have a big impact. The comment about supply and demand inflation, we know that that they have a supply inflation like everywhere else, but the demand internally, if you look at the economic data, is still like up and down at best. And if wages go up, it's a reply to high inflation, right? It's not a demand. It can create demand down the road, but is this market now completely positioned, or is it? Are we going to have to see a rethinking like the market needed to do on the US curve? Do we need to rethink and put everything on a much slower pace in Japan again? I think it's somewhere there's a possibility. Anyway, if you look at and then quickly on the dollar yen move, it was funny because as he started to speak, we had a little blip up to 134.90, and then the drop down. The drop down is the Tokyo fixing, purely the Tokyo fixing. We did the low of the dollar yen bang at 9:55 a.m. Tokyo when the Tokyo fixing is taking place, and from then on we started to recover. And also typically in Japan, having been there for 5 years, they have this kind of thing where they don't really react aggressively to what's being said or to data. They are very slow in reacting. We don't see moves in Japan like we could see on data in the US or whatever. They have been typically a bit slow, and probably the mega banks knew that they had to sell dollar yen on the fixing, so they held back during the first part of the speech before turning the other way around.
So what do you make of the price action? Because if you have to sort of pigeonhole the whole thing, he came out more Kuroda than not. And why hasn't dollar yen ramped high? I would expect it at least, to maybe be at a little, if not just a spike up to sort of 136, even just as Europe comes in and reads the headlines and whatever. I'm surprised it's been this subdued with those comments.
I think it's yields, because at the same time dollar yields were slipping a little bit, and yeah, perhaps they're still waiting for the votes for him to be voted in for the Monday upper house meeting. I mean, it's sometimes a tough call. I mean, as people know in our room, I bought it yesterday on the Tokyo fixing. Because of everything that I just said. I think he was quite mellow, and I think for yen bulls he didn't give anything. But I think it's more about yields differentials. It could just be a slow one, a slow burner, and and there's still, there's still a lot of things to take into consideration. There are still rumors flying around in the market that Kuroda may go out with a bang and adjust monetary policy in its last meeting next month. So I think that is keeping the market on its toes, and myself included. I'm not blindly long. I've already taken a part off, and I'm going to manage it. But I do think it's putting a bid not only on the dollar yen, but also under those yen crosses, perhaps, and we are it's going to be more a case of, for as long as the dollar interest rates are not coming off, more a case of buying dips and taking profit in rallies, and perhaps the big boys haven't seen anything that raised their alarm in what Ueda said, and anticipated this kind of talks.
Yeah. Well, tinfoil hat time. Would anyone have been in smoothing things, perhaps, because it was
No.
seen outside of Japan as a potentially big market moving event?
No, but the fact that he said that they were going to, he had no comments on the FX rate, but he did say that they are scrutinizing the FX markets, and Kuroda, even with the dollar yen 20 big figures lower, was also saying that they were still monitoring it, and Kuroda already said something, and he got pretty lost that day. He said it, I don't recall exactly when, but they were still monitoring this 200-300 pip move, and if you look at the lows, like 134.20, that would put us anywhere between 136.20 and 137.20 if you take his word for it. And so perhaps the market is just a bit reluctant to go sell yen in droves. And as you spoke about the data, the CPI is above 4%. And really, I don't understand why he specifically was saying that he expects the CPI to have peaked already. That really puts him back into Kuroda's side, as you say. And I don't really understand. I think he really missed a chance there to leave doors open to do more.
Yeah, definitely. Well, PM Kishida was out with some comments thereafter, saying that he's aware of Ueda's comment, saying he sees no immediate need to tweak the government BOJ policy statement, and that he doesn't have, or the government doesn't have, any discomfort over Ueda's comment on the government BOJ policy statement, that he wants to meet at the earliest possible date to confirm government and Bank of Japan coordination. Bit of a strange term to say doesn't have any discomfort, which is a couple of rungs down the ladder from saying he's happy with it. That just could be a translational point there. But they're gonna, once it all gets confirmed, and don't forget we have the upper house hearing on Monday, so maybe not get anything new there, but also maybe Ueda's looking at the market reaction and looking at what he said today, and maybe he needs to do as Kay says and use it as an opportunity on Monday, but we'll have to wait for then. Over to the RBNZ, and Silk said again that not contemplating a pause in tightening. The forecast for the cash rate peak is not set in stone, and there's still upside risks to the inflation outlook. So keeping doors open there definitely for higher rates. Riksbank's Floden, once again banging on about the stronger SEK or the weaker SEK, saying they want a stronger SEK, but have no target and no special tools to get there. So leaving it purely down to the market. Just having a look at a bit more data coming in today, or let's go to, where should we go first? Let's look at the morning stuff today. So German Q4 GDP, the final numbers came in a little weaker, minus 0.4%. Everyone was cheering that it came in not as bad as expected at minus 0.2 in the first round of numbers. I think minus 0.4 was expected in those times, and everyone cheered that it wasn't that bad, but now it's gone that bad. So much for that. Spain PPI came in lower, still a healthy 8.2%, but the move is pulling back from the 14.9%, following the same lines in lower price pressures that we're seeing elsewhere, although the CPI number did come in higher for Spain for the same month. So a bit of a mismatch there between the PPI and the CPI, but the CPI can lag the PPI a bit. So maybe Spain from next month gets back into lower inflation. Going back to yesterday quickly, and US GDP as well, which came in on the low side. Second estimate came in at 2.7% versus a 2.9 prior. Some of the underlyings weren't too hot either. Sales 1.2%, so lower than previously, missing expectations. Also, consumer spending coming in positive numbers, but not as good as was expected, and definitely down last month. But a strange reaction, because the dollar actually shot up on this, and a lot of the market was pointing to this core PCE number coming in at 4.3% versus 3.9 expected. A strange reaction, the market buying the dollar and pushing yields up on that, because this is Q4 data, so it only runs to December, and we've already had January CPI, and we get January PCE today. So it's an estimation for this number, but it doesn't change the trend in inflation, that even though CPI didn't drop as much as expected, it still is going lower. I didn't get that reaction at all. I don't know if any of you guys, Kay, Stel, if you had any more thoughts about it, but a bit of a surprise to see dollar yen making fresh highs and the dollar bid all round, really.
Yeah. Well, regarding the PCE today, I don't think there's any. I don't think we'll get any big surprises. I think a slight drop will probably continue, in line with CPI. But the dollar strength, I think, is still on the back of yields. We've broken out in 10-year. We talked about it for a while. That breakout, remember, it was breaking out just before the which was it? Was it the CPI release? Yes. Yeah. And then we just kept going. So we were at 370 at the time, and we just got another 20 basis points, pretty much in a straight line. And I still think that the 10-year is going towards that 433 high. Now the question is what happens afterwards, because I think we can all agree that higher rates for longer will definitely hurt the economy, and it's going to manifest in housing first, which we're already seeing, and then everything else gets turns lower as well. So I think that the market knows that high rates for longer are going to, I don't want to say crash, but they're going to really dent the economy's progress, and that means that the 10-year, in my opinion, is going to really struggle to go and stay above that level, that 4.5 or 430, wherever that high is level, yeah. Because I'm pretty sure that the market is going to be very persistent in pricing lower rates going forward, as they are now. They keep moving them or pushing them further out in the future, but I think that's not unreasonable. So, but for the moment, I think the momentum is still there, and the move for yield is most likely going to be higher. And that's why I think the dollar is going to continue to grind higher, and risk gets pushed lower as well. And then we see, when we get to something like 3,700 in the S&P, that's a big decision level. So 3,600 actually is a big level. So we shall see.
Yeah, I mean, it's a strange one on the yield situation, and I think we've got to perhaps be a bit careful where we close the week, because if we close under this 3.9% area, is that going to change the picture at all? Because we had this break above, we made a fresh high over that data yesterday, but then in bond terms we collapsed over 10 basis points. And now we're just struggling to get back into that 3.9%. So is there an indication perhaps that the market is done pricing the Fed for now?
Perhaps, yeah. I think this reaction lower is surprising for me a little bit, but yeah, you could be right. I really think if we close below 386, 385. Or a 386, 385 or lower, that's going to be, and then in the near term, a bearish signal for yields. But it's all going to be driven by the number today. So let's see. Sure.
So yeah, it's going to be interesting if we do get a strong number and we see yields rally up again. It's going to be interesting to see if it holds it again like it has the last few days. And if not, I think we might be in for another round of profit taking, like we saw last week on the Friday. So be careful for that. Kay, what are your thoughts on the dollar reaction yesterday and what we're seeing in yields now.
It's one of those market looking through. Well, first of all, this Q4 thing, market looking through Q4 2022 now. Yeah, I didn't really understand the comment, to be fair, or what to make of it, where you say like the last month of the year or so on. I mean, I think the market is just shrugging it off, looking through it. As far as the yields are concerned, I think it's, if you want to price the Fed, you more look at the shorter end. I think the longer end could be hanging around. As I said, 4 is a bit of a psychological level, but technically, no, there's no level at all. To me, the break was 383. As I've been showing already a couple of times, and that's also when we broke above there, when the S&P started to react. And yeah, what people do in the more longer term is more like expectations of how the economy will fare, rather than where exactly the Fed is going to end up. I think since the market is still and as yourself were saying a couple of times as well, still looking further down the road for the situation to get a bit worse, and so this is why we see an inverted curve, basically. I think that particular scenario is likely to continue until proven wrong, and that's why I keep repeating that we are data dependent. If the next let's say if the next NFP is yet again a good one, then the market will have to reprice. But the 10s could hang around here until then, for instance.
That's next week, isn't it?
And that's one, yeah. But I mean, the market looks through certain data, certain stuff, and we've got too used to see those algos respond to any word or whatever. But if you look at the boys who really manage the money, they will probably be looking through most of what happens now and taking those data into account, what the Fed is saying into account, and that's where we see the 1 and 2 years still keeping up and continue to try to reprice where they think the Fed is going to end up. So yeah, I'm not going to read too much behind it. What happened yesterday afternoon.
Yeah, cool. Right, so just some information, because we are also in the month-end orbit, and a couple of the banks modelers are pointing to moderate dollar buying for month-end. So keep an eye on that around the fixed times, usually tops of the hours, and especially the London fix at 4 p.m. GMT. Just keep an eye on those in case you see any funky moves between now and obviously the last day of the month on Monday. Just to finish up the headlines before we do take that minute's break, really the stuff going on with US, Russia and China. The US says that intelligence points to the Russian Wagner group, this mercenary band, plotting against a key Western ally in Africa. The US
what's that group called again?
Wagner.
Wagyu. Isn't that kind of beef?
No, it's the composer Wagner.
Yeah, Robert Wagner. Yeah. Anyway, the US has said it has shared information with Chad, that's the country, that a Russian group is working to destabilize the nation's government. China was out with some comments their way to find peace in the Ukraine. Foreign Ministry released a paper on China's political solution to Ukraine, saying that respect sovereignty of all countries. A country's security cannot be at the expense of other countries' securities. Regional security cannot be guaranteed by strengthening or even expanding military blocs. A ceasefire and stop fighting will prevent the Ukraine crisis from further aggravating or even getting out of control. China's paper said gradually promote de-escalation and easing of situation and finally reach a comprehensive ceasefire. So after that headline drop that they're going to be potentially sending 100 kamikaze drones. Anyway, we're going to stop for a minute's silence, folks. Thank you very much for your consideration, folks. Much appreciated. Right, so that's pretty much it on the headline front. Quite a bit there. So let's get stuck into some of the price action. Let's have a look through some of your questions. Ali was looking at oil, a short at 77s. Let's have a look what oil is doing. Oh, where's it gone? Lost it. Come on, where are you? There we are. It's your short 76.02. For me, oil is really range at the moment. You know, give or take, we're in the middle-ish of the recent range down to that 70, 72 area. 82.50 is the top side level. You've been in the middle, I think, with that one, Ali. But good luck. If we do top out here, you know, we might get a move back down towards those lows there. You're trading off the MAs, so good luck for that one. Higher interest rates, economy into recession, which will damp oil demand, but oil is not going down. Should I hold this or wait to take profit? You look to be doing quite a short-term trade. So if you're doing a short-term trade, you're more playing the levels than playing the fundamentals. If you get my my view. So you're talking about things like interest rates and demand, which are more longer term effects for the oil market. It doesn't necessarily relate to what you're doing, which looks, as I say, as just a short term trade. So really you should be more concentrating on your levels. You know, interest rates may not change for 6 months and you're not going to be sitting in this trade for 6 months. So, you know, I think you just need to play it from the tech side as opposed from the fundamental side for that one. Eric says maybe subdued response bodes well for a stronger move down when it happens in dollar yen. Yeah, I think so. I think you've got a good point there for dollar yen. You know, I had a whole scenario set out yesterday for a potential trade that I was going to be looking at if all the boxes got ticked. None of the boxes got ticked, so I've done nothing. I was looking for a decent number on the CPI to maybe give a decent dip to buy into, on the basis of maybe UEDA not being as hawkish as the market might have liked. Didn't get that, and didn't get the UEDA bit either. So I did nothing, and so from here, I think, you know, Stell's right. We've got to keep an eye on yields and see what goes on. But price action wise, we are popping above 135. We are not holding above 135. And that's going to be the consideration. Again, you know, the last few weeks we've spoken a lot about where we close the week. I think, again, today it's going to be important where we close. If we don't close above 135, then I think maybe we're in for a bit of a pullback, because the market's tried and tried and tried and tried and tried, and it hasn't made hay through this area. I would be on watch for a bit of profit taking, depending on what we see after the data. So it wouldn't surprise me if we finish below 135. But then you have to look at the downside levels. You know, even when we failed, we haven't dipped that far, and that keeps this rally in play while we're holding. You know, the dips are very shallow still. It's going to take a break through 134, maybe 133.50 to maybe see some form of acceleration lower, just as all the short-termers, you know, chasers up here who are long, they'll start folding if these sort of levels break. But yeah, for the longer term, I think Ueda's raised more questions than given us answers, and it's going to be looking at the clock to see what comes next when he has his first major press conference or talk to the press or anything like that. It's still a while because Kuroda is going to be in the hot seat through the March meeting, so we've still got a while before he actually takes over. It may be a waiting game we have to play until he's in the hot seat. Maybe he doesn't want to tread on Kuroda's toes until he's finished. So we don't have any more answers. In fact, as I say, we've probably got a few more questions. Until then, we're going to be looking at the US side, what the US data does, what the market is doing with rate expectations. But as I say, price action wise, I think it may become significant if we can't get and hold above this 135 area for any significant amount of time. As I say, the longer that lasts, maybe we'll see a pullback a bit steeper. Aussie dollar nailing the fib, the 38.2 of the October rally at 67.80. The low so far today is 77. We had a go yesterday, we had another go today. But again, the bounces are very weak. Where price is sitting right on the lows again as we speak. So all the signs at the moment saying that we're going to be breaking lower, because look at the bounce. The bounce from here just about got into 68, and we've come back down really quickly, and the bounces are very weak. You know, not even getting to the 68 handle. So the bearish pressure remains, and it's looking like we might be heading lower. A break here could be significant for the rally because it's going to bring the 50 fib right into play thereafter, and the next area, big area of support will be down there into that 50 fib. But we do have some tech still around all this traffic area down into 67. So keep an eye on that. If we do bust this fib here, we could be making our way down there pretty quickly. Euro sterling. So it's picking up off the support area down here. It's been a slow burner this week, really not going anywhere fast. So we need to get it back above this 88, 25, 30 area initially. That's where the resistance is for now. Can't break above that level. Starting to find a bit more support again off the 88, 87, 90 area. But by and large, this one could go either way. The pound has sort of looked to have stopped rallying as it was the other day after the data, that strong data we got from the PMIs. But for me, this is just in a bit of a wait and see mode. Are we going to move down lower, or are we going to start climbing back up towards 89 again? I'm keeping my longs in this one. As we all know, it's a bit of a slow burner. One I want to highlight, though, is dollar yuan has kicked on. Really had a smash through the 91 area, 90-91 area, and has kicked on right up. Oh, moving numbers. Kicked on right up to the fibs here. And this is the fib of the move down from 737. So the 38.2 fib there, 95.60. Knocking around it at the moment. There's an old fib there, bit of a longer term fib, which is also in an area that's natural support previously when we had the move down back in December. So this is giving me the next area. If we get through there, then likely we're on for a move to the big 7. I've chopped some of my long into this area here, 95.30s. I'm going to start yanking my stops up behind and see where we go next from there. Kay, you still sitting in this one?
Well, you know, I closed it and I didn't call it, but I sneaked some in along the line again, and I just quicker sniping. I think from here up to 702 ish. Yeah, you just showed that 50. Is that around 703.60? I think all the way up there. We may, I think close to 7 at least. Those who caught this move are likely to go to take profits if we reach anywhere close to 7. So it's less than 1% away. So from here up to 7, I would say we could have that quick spike, perhaps into the weekend, perhaps next Monday on end of month or whatever. But I would expect 7 to show up, right? To have a say.
It always does.
This, but yeah, no, I mean it's actually I went out of it the other day because of those possible Chinese peace talks and the market perhaps having a little bit more confidence in the Chinese yuan, but it's all going the other way around. So I mean, there's no way really fighting this move, and I think any move back down to 690 is going to see more buyers now. I think it's still oriented to the top side. I don't see too much reason for it to come off if it doesn't come off on what may be perceived as positive Chinese moves also. But I think the market just shrugs it off as propaganda, as on the other state they're coming up with a plan, and on the other side they are sending their officials to Russia saying how much they love each other.
Yeah, exactly. But technically, it's looking a textbook break. Although I've just moved my line from where it was before. That 90-91 area was the big fat level there, going back, and we broke it, and straight after it's now support. So, say technically it's perfection. These are more minor lines going up, not really doing an awful lot, but you can see the steps: break, step, support, move up, step, support, move up, find support. So it's doing what it needs to do. Now probably we may, if we don't bust straight through this area up at 695s, 96s, maybe we see a bit of consolidation back down to that 91, maybe 92 area, before deciding what we want to do next. For now, there's just been some PBOC comments out talking about their 2022 or Q4 2022 analysis. No comments there about the level of the currency. No comments elsewhere about the level of the currency. So for now, they're happy to let this one go where it wants. If they do come out with any comments saying that these moves will not be one way, or the market shouldn't expect these moves to be one way, that'll be the signal to chuck it out and look for the price to go the other way. So that's one thing I'll be looking at for now. Kay or Stel, do you want to? You got anything you want to show us?
I don't have much actually. Sorry.
No worries, mate. Kay,
I'm gonna wait for a PC.
Yeah.
Yeah, I can show a few. I can show a few things, but
Sean wanted a look at Euro Aussie. I'm sure you got that one.
Yeah, I've got that one. But first of all, the dollar yen, slightly different picture as most perhaps. But anyway, I mean, this is the dip. Is it? Yeah, this is the UEDA dip and the Tokyo fixing dip. This one. So I caught this one here. I caught the knife, and I think there may be a bit of a resistance coming up here in the 135s. But then and then above, it's probably going to be this 136 zone where we've been, the high 136s we've been talking about, 137. That this is where we have the confluence of the moving averages, and up to today, that's where the top of the daily cloud also lies. So if we'd ever see on the fixings or whatever an acceleration in the dollar yen, and we would go and visit those high 136s, I think this may be it for this week, because I would imagine that we're seeing a decent profit taking up there. Now, pay attention to the cloud, because on Monday this drops by 200 points, and on Monday the top of the cloud will be at 134.85. Now, two things: either we may see like a move up and then a sharp move lower again if people trade, or for those who trade these clouds, or we walk in on Monday and we are still hanging around here somewhere, and the Japanese say like, oh yeah, we are breaking above the top of the cloud. Now we are going for it. So there could be a couple of scenarios here. I've explained why fundamentally I'm long dollar yen. Price action is one thing. The people love their levels, so I'm giving the levels. I think it's going to be a slower grind for as long as the US yields don't collapse. Yeah, now that I've taken already some off, as the people in the room know, around here, taking some off, this is now for me a free trade. So I'm going to watch the 134 for a starter, perhaps 133.60. I've got my stop just below here, by the way, right now, but I'm going to ramp it up probably if we close around here. I'm going to ramp it up to just under 134 or even just below the low we did there on that Tokyo fixing. But anyway, to me, he's missed his opportunity, Ueda-san, to give the bulls some food there in the yen, and I could see dollar yen, but dollar yen will also be a result of what's happening in the crosses. So, and I also see the Japanese the yen crosses ticking up a little bit. So I'm still positively, at least for the short term, biased in this one. Speaking about the yen crosses, we had this Ueda setback. I trust there's been a few stops done here pre-Ueda, and then we had this fixing move as well. But now we're already back above this 142.75, 85, where we had those prior tops in place. So this is back to be an area for me. If it holds, we can have a move back up to the 144s, in my opinion here. If in turn we start to end and close the week below this level, then there may be something different going on either one of the currencies, whether it be euro or on the yen side, the dollar yen finding a serious top. Then quick look at the yields. Okay, on the short-term differentials, we're still bouncing around the lower end in between euro and the dollar. What we've seen of late, I'm not sure really why, because I haven't seen too much difference between data to justify a move wider in the spreads, but we could be just the dollar side driving these things. As I was saying on the US 10s, to me this is the level here, this 383, and then we capped around, just went above, and we capped around 395. So this is your short-term range, I think, to watch on the US 10s. And it's also going to drive partially, at least, the dollar yen. We have the yen side of the thing, and then we have the dollar side of the equation, of course. And then, Gavin, you mentioned this the yen futures. I'm usually not watching those at all, but as you say, this 38.2 here seems to have played a little bit lately as well. Seen some reactions of it, and we're trying to get back below. So for those watching futures, the yen futures are trying to break a bit lower, which should weigh on the yen somewhere. But I'm not an avid watcher of these, to be honest with you. I'm going to talk about a couple of different ones. Dollar Norway. Yesterday again, we tried to break this resistance, and we're still not going. We're still not going, but we are close, and the dips we're seeing higher lows. So perhaps to close the end of the week, we may have a bit of a move, and trying to shake out people who try to trade against this resistance line. So I'm rather thinking it may push a little bit higher towards the end of the week, but keep an eye on the close of the week, of course. We could see a push and then fall back down here. So that's for the dollar NOK. Euro NOK is not moving that much. Yeah, some people are in Aussie Kiwi. That thing really broke down. I think The next level here again is this 108, 85, 80 zone, and then probably around 108.60, 108 and a quarter if it goes. As I said, there's a clear divergence now between the RBNZ and the RBA. That's in favor, is swung again in favor of the RBNZ. So Aussie could be a little more heavy than the Kiwi. So Ryan already showed this. Aussie trying to break now below this 67.80. I think we could, if the break holds below, we could end the week somewhere here between 67 and a quarter, 67.40 perhaps. Unless something dramatic happens or we see like a big need of dollars somewhere in the markets, I don't see too much more fundamental reasons for it to really crap the bed. But yeah, we can't rule it out. If anything, if we see a real acceleration, it could take us into the mid to low 66s. But for the time being, this looks still pretty heavy to me. Kiwi in turn really putting up a fight here, but the bounces are relatively shallow. That's probably just due to the dollar side, but keep an eye on this 61.95, as we've already been showing a number of times. 62, 61.95. We're trading just 5-10 pips above. Either we are seeing those bids coming in again because it's been a decent bid area, in which case Aussie Kiwi may see another move lower, or we are going to have a sudden break of this. Keep an eye on that one. One more that I want to show, one more, and it's this dollar rand. Let me. I need to clean this up a little bit, but we can see that on the shorter term, medium term, from October down to now, we are banging our head against this 1838. So we are right there. I've explained all the problems that are going on in South Africa, on the fundamental side, on the energy side, on the geopolitical side, and looking at the dollar, I haven't the impression we are in for a break here before possibly even before the week is over. There's a second line which comes from the highs of 2020, and that lies around 1840, call it 46, 47 today. So that may be your next price or zone to look at if the 1838s give way. So not saying that we are going to fly high, but it's my impression. I'm scalping that way in any case right now, and I think we may be in for a bit of a break. And then really the last one, dollar MEX is still pretty flat correction right now, but the main message here is that we're still trading under 1850.52. So for as long as we don't regain this, and we don't regain this this channel, it's still bearish. But I'm a little bit cautious right here, right now. I have extremely light position in Euromex, but I've cut most of it the day before yesterday, or no, yesterday on the no, the day before yesterday on the Mexican CPI coming off a little bit. And that's it for me today, Ryan.
Thank you very much. Just looking at that Kiwi, I've just dropped in a sell stop, actually, 61.85, because we are. Let me get it up on the screen. So
I was just going to show you again.
Yeah. So I'm sticking in a sell stop because I'm watching around, and cable's going, euro dollar's going, Aussie dollar's trying to go, Kiwi's holding up, and I think if the dollar is going to get a bit of a bid on, it's not going to be able to hold up for much longer. It's not going to fight to stay up above that 62, 61, 95 for longer. So I'm going with a little sell stop and see what happens.
I thought someone pegged the euro sterling at 88 the figure for a while, but we are trading 88 and a quarter again. it should in theory be trading 88.5 as the clock strikes 3 today, because that's where my expiry of my option is expiring today. And I have this nasty habit of picking the levels where it's really going to where it expires all the time. So people in the room, I've already been joking about it, that it's probably going to trade 88.5 at 3 p.m. this afternoon, and it's taking the looks of it. But anyway, I've been trading this around quite a bit. This one already could show up here in the 88.30s euro sterling. I think we are just in ranges, but for the end of the month, I have the impression that we may see a bit more euro or sterling selling, just due to the difference in equity moves over the month of February. But hey, that is done.
Yeah, cool. I'll go it back quickly before we finish up. Ellie's asking what would be my stop loss and take profit on the Kiwi. Well, this is what I'm looking at now. So it's going to need to break under here. So I'm giving it, 10 odd pips, 11 odd pips to get a proper clearance, which is why I'm going at 85 rather than putting a sell stop in here. So a sell stop is only triggered if we break below that area. The stop on that is currently 62.25, so just above this area here. But if it just flushes out, doesn't go far, and gets back above 62, I may fold it up manually. I'll do it on the price action. Profit target, I don't often have profit targets. I very rarely have profit targets. If it breaks 85, then I'm looking to maybe take half off, 10, 15, 20, 25 pips, get out half the trade if I get it quickly. Instantly, I'm at zero risk because my stops, 35 odd pips, and I've taken 20, 25 pips, maybe more. I'm close to zero on my risk. And that is my only first consideration when trading. Get my risk to zero first, then worry about the profit. If it happens, if it works out and I get me 20 pips for half, I can sit back and see where it wants to go. And if it goes all the way to 60, I'll try and ride it all the way down there. If it only goes to 61.50, then I'll trail my stops behind and see what happens after. But I don't care about profit targets. I care about getting my risk to zero as fast as possible. That's all I do every time I trade. Right, I don't think any other questions from your boys and girls coming in. Nope. So all that's left is to thank these two musketeers alongside me, Kay and Stelios, for their input this week. Thanks, guys.
Thank you, and it's good to be back.
Have a splendid weekend.
Yeah, and thank all you viewers for following us through this week again. I hope we're doing some good for you boys and girls. Let us know if we're not. Please have a safe and peaceful weekend. Take care, watch those fixes, watch the PCE data. See you all on Monday.
Bye-bye.